Hi guys, so the video that you're watching now is from the trades from yesterday, which is 16th of April and it's 17th of April right now. Should be a pretty quick video, but I'll just go over it because there's like one trade that I took, but another one was a forward test, and I just kind of wanted to show you guys the forward test. Just keep in mind weekly open is around there, and we have a daily fair value gap right here. So on the daily, you guys can see we have just been going down the few days before, and then we were also in this daily fair value gap right here yesterday, which was untapped, and our weekly open was around there. So we were oversold and we were in a bearish fair value gap. So going down to the 4 hour, this is the trade from yesterday. Basically there's not much in the 4 hour. We just basically swept this liquidity, but that's usually not my confidence. The main higher time frame POI that I was looking at was just that daily fair value gap that we're in. Going down to the 1 hour, as you guys can see, this is this Asian session range right here. We'll look at this first. So after we swept this Asian session low right here, we went up. We got a 5-minute fair value gap right here, and we didn't enter it, so that's fine. We just keep looking, and we got another 5-minute fair value gap right here, and we entered it, so I entered there, and stops just below the low that created that 5-minute fair value gap. So and targeting that high, so 122.59. So this is a pretty straightforward trade, just like a standard. We have our higher time frame POI, we have our liquidity swept, we have a draw on liquidity, and we got that entry model right there. And now this is the one that I mainly want to talk about today. It's just this move that I usually get before that sweep of liquidity, but it doesn't happen all the time, and it actually rarely happens, but when it does, it's just a pretty simple and quick trade. You can see if you go to the 30-minute, you can barely see the trade because it's so fast. So all you have to do is just during Asian sessions, if there's a move like this where it creates a fair value gap, look for a 30-minute fair value gap, and I wait for it to respect. So we got a fair value gap and we respected it. Down on the 5-minute, we got a fair value gap right here. So a 5-minute fair value gap after respecting the 30. So 5-minute, 30, and then on the 1 minute, as you guys can see, the 1 minute happened quite late, but it still happened. So that's the reason why I sort of took a forward test, was just because it happened a bit late and because the risk to reward wasn't that great right there, and it's a 1 to 1.48. So I just didn't really take the trade and just put it as a forward test. And the thing about this strategy is that you have to have it within the 2 to 3 window. So it has to happen between 2 to 3 a.m. because this is usually what happens before that sweep. So I want it to happen from like middle-ish of the Asian session range to either the high or the low of the Asian session range before it goes to the actual strategy here. This has to happen in context as well. So you know, I had that bullish bias going into the day because of this daily fair value gap, and because of because of the oversold and stuff. So this is the bullish example, right? So we have a down move, we have a fair value gap, a bearish fair value gap right here, and so we catch this down move before this bullish move, right? So here's a bearish example for you guys that's like a bullish one. In terms of something like this, it's we are going down, and this is Asian session, this is London session. So Asian session, we're consolidating, we create some sort of fair value gap here, and then as it re-enter into that 30-minute fair value gap, we wait for a 5-minute and then a 1 minute, and then we take a long there, targeting that Asian session high. And then after we get that, we can look for some sort of short opportunities when we sweep the Asian session highs and we get into some sort of higher time frame POI here, probably like a 1 hour or 4 hour higher time frame POI, and then swept off this Asian session highs, and then some sort of entry model here, and then we short here. So that's how sometimes I'm able to catch both the moves. It's just when it's something like this. And this is a bearish example, and just to make it a little bit clearer, I'll draw a bullish example as well. So this is our Asian session, this is our London session. We wait for it to consolidate during Asian session, and we have this higher time frame POI right here, like a 1 hour or 4 hour, that we're expecting price to sweep Asian session lows, and we're expecting it to go into some sort of higher time frame POI and go up. So before that move, we can catch a short right here if we have a 30-minute POI here, and then a 5-minute and then a 1 minute around here. Then we can do something like this, take a short and target that Asian session low, and then when it takes out the Asian session low and enters the higher time frame POI, like a 1 hour or 4 hour, then we can, or a daily, and then we can look for another entry model here, then long here, and then target that. So that's the like sort of bullish continuation. In this case, this real life example right here, it's a bullish, but it's a reversal. So that's why it looked a bit weird, because it's like this, but it's a reversal. So yeah, it went down, but I have a bullish bias, and we've got that. 30-minute POR there. All for today's video. It's just like a strategy that I use sometimes, and so that's just something that I wanted to document down.